you've been watching the headlines this week, you probably saw some eye-catching news about mortgage rates briefly dipping below 6%. That definitely grabbed attention, and today I want to break down what exactly happened, why it matters, and most importantly, what you should realistically do with this information. No hype, no speculation, just practical guidance that you can use. But before we go diving in, I do want to give you a quick thank you for tuning into this week's Friday market update. I really do appreciate you spending a few minutes with me here. If you find these updates helpful, go ahead and tap that like button down below and subscribe to the channel. It's the easiest way to stay on top of what's happening in the market and what it actually means for you as a buyer or as a homeowner. Plus, by doing so, it really does help the channel reach much more people, and we do appreciate that. So thank you in advance. Now, let's shift lanes and get to the meat of the story here. Here's what has happened. Mortgage rates dropped suddenly and briefly, something we don't see very often. Now, the drop was a result of the directive by the president for Fannie Mae and Freddie Mac to buy $200 billion worth of mortgage bonds. Now, the idea of these purchases gives lenders more money to lend to home buyers, which creates a higher supply of cash that allows interest rates to fall. When that happened, well, people reacted fast, and we saw that. Refinance applications jumped sharply, and buyer activity picked up as well. Now, that, when you take a step back and think about it, that tells us something important about the market here. There's a lot of pent-up demand waiting for even small changes with the rates. But it's also important to understand that this, friends, wasn't a long-term shift. It was a short window that created a burst of activity. So if you're a homeowner, well, this news may have made you wonder whether you missed an opportunity or whether another one could be coming around the corner. Now, the reality is that many homeowners are still sitting on very low interest rates from years past. Now, the average existing mortgage rate, which is around 4%, is still well below where new loans are today at around 6% at the time of this recording, which means refinancing doesn't make sense for everyone. However, if you bought refinance more recently and you're carrying a higher rate, even a brief dip like this can be worth a closer look. Sometimes it's not about timing the perfect rate, it's about understanding whether a move could meaningfully improve your monthly payment or overall financial picture. Now, for buyers, this rate dip, it did boost confidence more than anything else. When rates move down, even slightly, buyers feel encouraged to re-engage. And we saw purchase activity rise, but we didn't see a sudden frenzy. Inventory levels still matter, pricing still matters, and affordability unfortunately hasn't magically been solved. This wasn't a signal to rush. It was a reminder that being prepared really matters. And we've spoken about this numerous times on this channel. For example, buyers who are pre-approved and financially ready are in the best position to take advantage of moments like this when things pop up. And the big question I keep hearing is whether this kind of move will change the market in the long term. Now, most experts agree that while actions like this can smooth out volatility and apply some downward pressure on the rates, they don't reset the market overnight. Mortgage rates are still influenced by the bigger economic forces, and short-term dips, well, tend to, they come and go. Instead, the takeaway here is stability, not dramatic shift. So what should you do right now? Well, if you're a homeowner, you should take this as a cue to review your current situation. Not a panic, not a rush, but to understand your options. And if you're a buyer, well, you should stay focused on what you can comfortably afford and make sure that you're ready to act if another opportunity presents itself. For everyone, well, this is a reminder that headlines don't replace personalized advice. That being the case, before you make any decisions, have a real conversation with your real estate agent or lender and walk through how this market activity can affects your situation specifically. And after all, what works for one person may not make sense for another. So with that, you have a quick overview of the recent changes in the market here for Friday. I hope this has been helpful and you gain a little insight into what the movement in the rates could mean for you. Now, of course, as I mentioned, be sure to have a frank discussion with your realtor or lender about this issue like this. They understand your specific situation and they can give you advice based upon knowledge of your goals and your finances. Now, as for me, I think that it's time to wrap it up. Thanks again for watching this week's Friday Market Update. I certainly do appreciate the moments I get to spend with you. If you want to dig deeper into what's happening in the market, be sure to check out my other videos here on the channel. And as always, if you have questions or want to talk things through, reach out by leaving a comment down below. If you happen to be in California looking to buy or sell and have some questions, by all means, my contact information is listed right below this video as well. All right, friends, that's going to be officially it. I'm going to be shutting up the cameras. I will see you in the next video.